Imagine waking up one day and realize that one of the world's biggest industries isn't technology, isn't real estate, and isn't even oil. It's war. And what if I told you that the business model may be approaching a major turning point? Because if it is, oil prices could change, AI investment could explode, and the next generations of winners and losers on Wall Street may already be getting decided. For decades, investors have been taught to watch inflation, interest rate, and corporate earnings. But sometimes the biggest market moves begin thousands of miles away. A blocked shipping route, a military conflict, a diplomatic agreement. One event in Middle East can ripple through energy market, supply chain, and eventually your retirement account. And that's exactly why what's happened right now deserves attention. The modern global economy runs a stability. Factories need stability, data centers need stability, AI companies need stability, investors need stability. But for much of modern history, large part of the world part have been shaped by conflict and geopolitical competition. Wars doesn't only destroy, they also create enormous spending. Governments spend, defense companies receive contract, reconstruction project emerge, energy market move, market react, money changes hands. This doesn't mean anyone wants war, but it doesn't mean war have massive economic consequences, and investors ignore those consequences at their own risk. Now sometime interesting may be happening. The next phase of global economy appears to be certain around something completely different. Artificial intelligence, robotics, data centers, semiconductor, energy infrastructure. These industries require hundreds of billions, possibly trillions of dollars of investment. And unlike war, they require predictability. You can't build trillion-dollar air system in major shipping routes are closed. You can't power massive data centers if energy markets are constantly in crisis. You can't plan decides of investing if the world is permanently on fire. In other words, the economy incentives may be changing. Think about what companies are doing right now. Microsoft, Nvidia, Amazon, Google, and Meta. They are all racing to build the infrastructure of artificial intelligence. This isn't a small trend. This could become one of the largest capital spending cycle in modern history. AI requires chip requires factories requires energy requires a stable supply chain. Suddenly global stability becomes an economic asset, and that's why investors should pay attention to geopolitics, because geopolitics can determine where capital flow next. The biggest question isn't will there be another conflict. The real question is where is money flowing. Throughout history, capital has constantly shifted towards the next major opportunity. Railroads, automobiles, the internet, smartphones, cloud computing, now perhaps artificial intelligence. Whenever capital moves for one era and another, new fortunes are created, and old businesses model lose influence. The market doesn't care about emotion, the market flows incentives always. And this clouds certain one of the most important investment themes of the decade. If the world gradually moves towards greater stability and infrastructure investment, companies building AI systems, semiconductors, power generation, energy grid, and digital infrastructure could become enormous beneficiaries. But its instability accelerates instead. Oil, defense spending, and traditional safe haven assets may continue to outperform. Either way, investors need to understand the game, because markets are constantly pricing the future before headlines make it obvious. Maybe the world is entering a new era. Maybe we are simply witnessing another cycle. Nobody knows for certain. But one thing is clear. The relationship between geopolitics, energy, artificial intelligence, and capital allocation may shape the next decade of investing. And if history teaches us anything, the biggest opportunity offer appears while everyone else is still arguing about the headlines. Because by the time the future becomes obvious, Wall Street has usually already moved on. If you enjoy this video, subscribe to So Financial, because here we don't just follow the news, we follow where is money is going.